Is land cost coming down? Today, I'm going to talk about recent development in the land sale market in the Lentor area. This is after a government land sale site in Lentor Garden received a sold bid of 486 million or 985 per square feet. This is one of the lowest land bid in recent months. Does this mean land cost is coming down? And will property price be coming down too? Before we jump to any conclusion, let us study the details first. Let's go. Hi, my name is Alan from Alan Wee Property. Welcome back to my YouTube channel. In this video, we will be mainly talking about land sale in the Lentor area. Lentor area has seen a flurry of land sales activities since the launch of Lentil Central site in July 2021. Currently, this development is known as Lentor Modern, with a retail mall at the lower level. It is also directly connected to the Lentor MRT station along the Thomson East Coast Line. This site was sold to Guacoland at 784 million or 1,200 per square feet after outbidding 8 other bidders. This is a mixed-use development, so the land cost will usually be higher. If you are still keen on this project, there are 70 units still available. Price start from 1,952 per square feet. 3 bedrooms start from 2.1 million and 4 bedrooms from 3 million. The second site sold in Lentor is previously known as Lentor Hill Road, Parcel A. This government land sale site was sold to a joint venture between Hong Leong Holding, Guacoland and TID. They secured this site at 586 million or $1,060 per square feet after outbidding 3 other bidders. This upcoming new launch is now known as Lentor Hill Residence. There will be 598 units or 1 to 4 bedrooms with dual key units. The target preview is end of April or early May. If you are keen on this project, you can contact me as my company is the appointed marketing agent for Lentor Hill Residence. The third Lentor site, which is known as Lentil Central, was sold to a consortium of China Communication Construction, Soy Build, United Engineers, and Yalok Land. They secured this site for 481 million or $1,100 per square feet after outbidding 2 other bidders. Take note, the land cost is 4.5% higher than the Parcel A site. The fourth Lentor site, which is known as Lentor Hill Road, Parcel B, is slightly smaller and away from the MRT station. Was sold to TID Residence, which is part of the Hong Leong Group. They secured this site for 276 million or $1,130 per square feet after outbidding 1 other bidder. The land cost is 6.6% higher than the Parcel A site. If we look into the land bids, the other bidder is Soy Build and Partners. They bid only 950 per square feet. The difference between the 2 bids is 19%. The TID residents overpaid for this site. Interestingly, let's come back to the most recent development. Lentor Gardens is the 5th site for sale in the Lentor area. This site received only a sole bid by Guacoland and Interpid investment at 486 million or 985 per square feet. This is a record low bid in recent months. Why such a low bid? I can only assume 3 reasons. Firstly, they could have learned something from Soy Build and Partners bid that came in at 950 per square feet in the earlier GLS tender. Will Soy Build and Partners bid for this site again and try to cement their presence after their Lentil Central win? If that is the case, it makes sense for TID to offer a little higher to secure it and yet not overbid like their earlier tender. Secondly, the developers know that the number of tenderers begin to decline with each tender since Lentor Modern GLS site. The number of competitors get fewer and fewer. There could be an oversupply situation in this area with a more cautious market outlook and a high interest rate environment. Hence, if there are fewer competitors, why bother to bid so high? Thirdly, TID will want to protect and defend its price for its other project in the Lentor area. They do not want others to come in with a low bid and sell at a lower cost. This will have an impact on its other projects. Having said that, it will be interesting to see if URA award this tender as this is 15% lower than the earlier GLS tender. I think the planners will also compare it against the Lentor Hill Road Parcel A, which was sold in January 2022 at $1,060 per square feet. The land cost has appreciated by 7.6% in just 14 months in the Lentor area. Therefore, it is justifiable to award this piece of land, as it is deemed to be the market valuation now. The most important question will be, since land costs go down, will property price go down in the Lentor area? On this question, it's very hard to say. It depends on the take-up rate and the ultimate selling prices. In this case, Guaco Land and Hong Leong Holding have a big say in the selling price in this area. In Cantonese, it is called Zha Fit. They have deep pockets, strong track record, a vast network of clients, and most importantly, they have a good 5 years to sell all these new homes. They still have a very long runway to go. You no worry. I'm very sure by then, all will be fully sold. Once again, in property obsessed Singapore. Hold on, we are not done with Lentor yet. There is another upcoming GLS site in the confirmed list that is going to be launched soon. This site measures 1.47 hectares and can build up to 475 units. What kind of prices are we looking at? Will TID, Guaco Land and Hong Leong come in with a mid-950 PSF bid? Or will it be a dark horse developer that want to bid low and sell high? How will this affect the pricing in the Lentor area? This will be interesting to watch. Next, there is also another GLS site in the reserve list. This site measures 2.06 hectares and can build up to 500 units. I doubt it will be triggered for sale unless some developer want to test the market and buy low. In addition, there are another 3 pieces of land zoned for residential use. Seriously, why is URA so kanchiong to launch so many sites for sale in this area? They scared residents put a white elephant sign near Lentor MRT? But Lentor MRT is already in operation leh. In my opinion, they should launch EC site in this location. There is a pent-up demand from HDB upgraders. Most, if not all, are already priced out of the private property segment. If the authorities scared EC owner will make a windfall like BTO flats, which likely will be, then please follow the prime location public housing PLH model for HDB flats in prime location. Just copy and paste the rules such as longer MOP, capital gain tax, and priority for those with 2 or more children. I'm very sure our birth rate will go up the roof. For developers, please copy BTO layout as they are the most practical design. Don't need to overthink. Just use the same architect that designed HDB flats. I realize this architecture firm designs some of the best HDB flats around. You can go to their website to find out more. By the way, I'm not affiliated in any way with them, nor am I being paid to promote them. To top it off, just incorporate IKEA furniture into EC. I think they are a perfect match for HDB upgraders. Going forward, I wouldn't be surprised if someone will use my proposal. In conclusion, the lower bid for Lentor Garden site is still early days if future GLS land price will decline down the road. New homes are still selling well and the take-up rate is still healthy. Although the momentum has been losing steam in the past few months. It will be interesting to observe future GLS sites that are sold in the confirmed list. That's all. Please like, share and subscribe to my YouTube channel if you find them useful. See you around soon in Lentor. Thank you.